Time for our ETF Spotlight. Tech, of course, has driven much of this decades-long bull market. Here now at Post 9, Gene Munster, managing partner of Loup Ventures, who rang today's New York Stock Exchange opening bell to celebrate the launch of his ETF, the innovator Loup Frontier Tech ETF. Everybody should have an ETF, Gene. I'm glad you do.
Thank you, David.
We're almost there with everybody else.
Right, thank you.
What are you doing with this ETF that's going to set it apart, that's going to make me, or an investor out there, interested in wanting to participate?
So what's unique about our ETF is we're really playing into this next wave. And so there's always little waves going on in tech, but every 10 years or so, there's a big wave. In the case of this next wave, it's a combination of 5 things, which is AI, robotics, self-driving cars, augmented reality, and virtual reality. And what's unique about this ETF is it really highlights that group. Other ETFs like Robo and Bot, for example, are more robotics focused, so we really get that sweet spot. We're also emphasizing smaller companies, kind of the $500 million to $5 billion market cap. So a lot of these companies you wouldn't. So
you're not going to just end up owning Alphabet and Nvidia, for
Exactly,
example.
That's true. Tesla happens to be in the index. AMD, there are a couple big ones. I would also just point out some quick research that we did today. We studied 40 companies and looked at their performance over the last 5 years, 40 tech companies. And what we found is growth typically pays off. Apple's a big exception, still a huge believer that there's a lot of upside to Apple. But outside of Apple, over the last 5 years, the companies that grew at greater than 20% returned on average 6x, and the ones that grew less than 20% returned on average 2x. So what the point is this ETF really wants to capture growing tech companies that you haven't heard of.
You have an equal weighted portfolio. It's an approach, I guess, you kind of spread your bets. You're not necessarily saying, to your point, the biggest companies are going to be the biggest winners. But obviously, I guess that also means you can afford those that sort of don't work, right? I mean, I'm thinking a few years ago, would you have had 3D printing stocks in here or something like that, where you never know what that risk is, that it's going to be a little bit of a kind of a passing fad?
There are 30 companies within the index, so there is a little bit of diversification related to that. 3D printing is not one of our themes, but your point's well taken, is that there may be something that's not going to work out. The rules and algorithm around this weights it based on performance, so the companies that are performing the best tend to get the biggest weighting within the index.
The timing is kind of interesting here, Gene. I mean, today we're talking about the longest bull market on record, tech making up the biggest return in that. We're all debating whether this is the late cycle, this is the end of the cycle, this is the peak, and where technology fits in, given it's been so dominant over the past few years. What is this launch today saying?
I think what it's saying is that there's still some massive untapped opportunities within what tech can capture. Over the last 10 years, tech has grown because it's taken over retail and taken over advertising, taken over personal computers and replaced that with devices. But in the next decade, you're going to see tech taking over things like transportation and healthcare. And those are the segments that I think can keep this bull market around tech going for the next decade.
Gene, thank you.
Thank you,
I know
David.
we'll have you on soon to talk more about Apple or Tesla or things of that nature. Always nice to see you.
Can't wait.
And congrats on ringing the bell.
Thank you.